Hello, everybody. Welcome to another episode of the Tech Guys Who Invest, where we help you invest wisely and safely. Today, we'd like to talk to you about the topic of what if you only have a little money to put into some kind of a self directed or some type of a retirement account? What do you do with that money? Because we talk a lot about putting money into a self directed IRA so you can invest that in real estate. But there's a minimum amount of money you would need in there to make an investment in real estate. What can you do if you only have a few $1,000s, like 5 or 6,000?
Yeah, so with that, with $5,000 to $6,000, first of all, a couple of things. If you're listening to this in 2021, the contribution deadline is May 2021. It's normally April 15th when taxes are due is when you can stop. So let's say you started contributing your into your self-directed IRA in September of 2020. That would mean you have until May 2021 to contribute this $6,000, which is the maximum. And $6,000 doesn't seem like a lot, and that's totally fair. What you also can do, and then we'll go back to investing with little money, but another way you can do to grow that fund or increase that lump sum of money is you can take money from your 401k and roll it over. If your company offers, let's say, an active withdrawal is what it's technically called, or if you were to get a new job, for example, and you have money in that 401k, you could roll that over into your self-directed IRA, and that limit doesn't you won't consider it wouldn't be considered hitting that limit. So let's say hypothetically you had 50,000 in your 401k. You got a new job where they let you do an active withdrawal. You can take that money out and now you have 56,000 in your self-directed IRA. So that's one
Yeah,
way to add more money to it. But what happens
that's
if you sorry, go ahead, Adam.
yeah, I was going to say that's great. I mean, that's a great tip. If you've got that money, that is one way to be able to put it to work for you the way you want to.
Yeah.
In a situation like I had with my daughters, maybe you have a kid who you want to get a Roth started for, or you want to do some kind of a college fund, that kind of thing, right? Um, if you're just getting started and it's the very first time you're going to open this account, the maximum you can contribute in that first year is 6,000. So what do you do with that? You don't really want to open a self-directed IRA account and pay the fees associated with a self-directed account only to take your 6,000 and only be able to invest in like some kind of mutual fund or index fund, right? It just wouldn't really make sense. So some advice I got, which I thought was pretty good advice, is take that and do it in a low cost account like a Vanguard account, for example, and get a real low cost index fund of some sort and invest it there and let it grow. And it'll grow there with lower fees. And eventually you'll get it to a point where it is at a size you could invest in something like a real estate deal with, and then you just roll it over into the self-directed account at that time, and now you can invest in real estate.
There you go. That's one way to do it. And if let's say hypothetically you have $6,000, you've maxed it out, that's all you could put in. That's fantastic. You could, in theory, then create a note around $5,000. I don't recommend all $6,000 because, like you said, fees and there's just going to be administrative stuff you may have to pay for, like contracts with your from your attorney to make sure that they read it over. And if you are investing with a self-directed IRA, the expenses of the deal have to be paid for by your self-directed IRA. So just keep that in mind. You can't cross the funds of, oh, I'm going to pay for the lawyer fees with my checking account if the deal's for your self-directed IRA. They won't. It's not really a good thing to do because you could lose all your money effectively. Um, but yeah, you could issue a $5,000 note to somebody, to an investor. I can promise you, investors are always looking for money. Now, if you're going to do that, I of course recommend it be secured. And the reason I say secured is because what's stopping the investor from running away if it's unsecured? Who cares if the note is 20%? The investor could say, "Oh well, I didn't. Oh well, bye bye," and then you'd have to figure out a way to pay for those to sue them, right? So it's kind of it's not my cup of tea. It's not my risk tolerance, but if it's yours, take the risk and you're comfortable with it. As long as you do your research, then hey, what more can I say? But you can issue notes and secure it with anything in your self-directed IRA, except things that are collectibles like trading cards or Insurance policy is another thing. So anything that derives its value from subjectivity, art, rare baseball cards, you can't really invest in with your self-directed IRA. But let's say the investor has equity in their rental property. You could take a second position where you are that second position on their mortgage, right? They're basically taking out a mortgage and you're the second lien on that property. So there's a lot of ways that you can do. There's a lot of creativity that you can do as far as a note investor. And I've even heard of people securing a loan with jet skis or cattle. I secured one of my loans by 2 work trucks. So it's all possible to do that. And you can grow it, like 8%, 8, 10%, whatever works. The beauty of being that lender is you can set those terms with that investor, and it's secured by something. So that's one way that I'd recommend doing it. I'm hard pressed to think that you could buy a rental with $5,000. I would kind of be worried if you bought a
Yeah,
rental
it's
for
going to
five
be
thousand
tough.
dollars.
Yeah, that is going to be difficult, especially with the prices of real estate nowadays. But, we just wanted to share a few of those ideas with you in case you run across this and you're trying to figure out ways to grow your nest egg and invest and build wealth for the future. So, hope that was helpful. And if you have any questions or other ideas that you'd like to share with us about what you might do with that money, we would love to hear it. You can reach out to us at techguyswhoinvest@gmail.com.
One more idea before we close. I just thought of this now as we're finishing up. Let's say you have $5,000, but you can also partner up with other self-directed IRA members to pitch into a bigger deal together. So that's another opportunity. You're leveraging your network as opposed to just leveraging the true capital that you have. So just another idea. And I can promise you that there are investors out there that are looking to make their money move that are in the same shoes as you. So just keep that in mind, keep networking, go to the, self-directed IRA webinars, or when it's safe, go in person, meet up with people. There's opportunity out there. You got to be willing to put yourself out there to make that money work. And when you get that money working, it's going to outwork you, so you don't have to work anymore. So
Yeah, I
like
like
Adam
it.
said, reach out to us if you have any ideas, have any questions. We're happy to help out. Techguyswhoinvest@gmail.com. Thanks, everybody.